we're talking to one of the favorite companies and one of the companies that has created significant wealth for investors, and that is Polycab. A leader in its own way. We have with us Gandharv Tongia joining in, who's a CFO and has been leading the company from the front. Gandharv, I guess you are a street favorite in every way. You've led from the front, added capex when the industry wasn't doing too much. Of course, you've gained and benefited from a lot of that proactive activity that was undertaken. But this is the very first time, and I must admit, and please correct me if I'm wrong, where you've not beaten earning expectations by a mile. You've kept up with what the street was expecting, but it's not as good as what we've seen historically. So let's start with volume growth, break it down between cables and wires, because I do believe wires has been flat this quarter.
Thank you so much for having us, and thank you for all those kind words. You're right. This quarter was slightly softer if we were to just consider a street expectation. Having said that, this was the best ever first quarter in the history of the company. You're right. We were able to register a growth of 21% as far as the top line of the company is concerned. Cable and wire business registered a growth of almost 11%. The institutional business registered a fair amount of growth. However, the exports business registered a bit of a degrowth, and we believe that's temporary in nature. The FMEG business also registered a growth of almost 21%. And with the help of government capex, the EPC business registered a growth of almost 292%. So across all the business verticals, we have been able to register a fair amount of growth. As far as volume is concerned, in cable and wire, volume growth was in the vicinity of around 10%. This has impacted, in a way, our margins a bit because of change in mix. The EPC business has registered a growth which is better than the other two businesses, and EPC business is slightly inferior as far as the profitability is concerned. But having said that, we are within the range of our guidance of between 12 to 14%, and we believe that in quarters to come, we would be able to maintain and improve on our EBITDA margins.
And I know you don't give out guidances often, Gandharv, but if I had to ask you about what sort of growth are you penciling in for FY25, you want to give me a range, or would you be able to maintain the same momentum for the rest of the year, or is there an upside risk to those numbers? You don't have to quantify it, but of course, qualitatively answer that.
No, you're right. Last time when we gave guidance, it was in after fiscal 2021. In 21, our top line was around 9,000 crore rupees, and we embarked on a transformation project by the name of Project Leap. Under this particular project, the quantitative target is to get to 20,000 crore rupees of top line by fiscal 26. 3 years later, last fiscal 24, our top line was around 18,000 crore rupees. So in around 3 years, we have doubled our revenue from 9,000 to 18,000 crore rupees. In the current year, we will probably recalibrate our guidance because 20,000 crore rupees, we believe we should be able to either meet or beat our own expectations of fiscal 26. Having said that, we firmly believe that we will continue to provide industry-leading growth. As far as the profitability is concerned, we believe that a 12 to 14% EBITDA margin is a decent margin to pencil in for the purpose of modeling. This, of course, has a upside as well as downside risks. But if we were to take an analyzed view, we should be able to maintain this margin.
Gandharv, margins this time around have seen a degrowth, right? And I do understand that the international business is the reason why your margins have been impacted. You want to tell us what went wrong, what is happening internationally? Because exports has been such a significant part or story for your growth chapter, right? When do you expect the export or the international business to pick up, and how much of international business do you need to maintain that 14-15% margins?
You're right. Partially, exports business is the factor why there was contraction in the EBITDA margin, but there were a couple of other factors as well. There was a fair amount of volatility in copper prices, and in the month of June, because of that volatility, there was sluggishness in the channel sale. In general, channel business is better than the institutional business, and institutional business registered a fair amount of growth. So that is also a reason why there is a contraction in EBITDA margin. The other important reason why there was contraction is the increase in EPC revenue. As I mentioned a while back, EPC registered a 292% growth, and EPC historically has been a lower margin business for us. So it's a mix because of this margin has contracted. On your question on exports, we believe this is transitory in nature. In a quarter or two, we should be able to go back to our regular exports growth rate. We believe over the midterm, exports should be able to contribute around 10% or thereabout to our company's top line.